1.121 billion for Foxtrot Golf.
All right, some of the important, the notable earnings I think are done here. Welcome everybody. Those of you not in the room and just on Twitter, nice to see some of you guys again. Wall Street Jesus, obviously here on the Tuesday Degenerate Hangout, and an interesting day to talk about, at least for a change. So quite a few things I wanted to touch and get your impression on. Let me get the questions open so I can see what the hell you guys are talking about. And as always, I see a couple of new guys on here. Welcome, guys. Basically, we get together every Tuesday and we talk about primarily aggressive options activity and overall trader sentiment, and try to use the two together and get a gauge and an edge on the overall market. So that's pretty much everything that comes out of my mouth is going to be most likely related to one or the other. All right, but if you have any questions, anybody who's new, if you go to wallstreetjesus.com, you can get the site off my Twitter as well, just in case you're a little unsure about the spelling or whatever the case. There's a strategy section. There's more information. You could take a peek there, and you'll get a lot of the more important questions answered. Put it that way. All right. What's up, Tree? What's up, everybody? So yeah, we have a lot of members on here as well, both from the Steam Room and private Twitter. Good to see you guys as well. And I don't know about you guys, but I think this is the best thing that happened to us. I really, really do. Because each and every day that went by, and this market was just in that melt up type grind higher, you know, and those of you who are members know exactly what I'm talking about. It was getting tough. It was getting really, really difficult, especially in individual names. I'm not gonna lie to you, I was completely lost. I had zero confidence as far as, you know, trying to swing anything as far as call positions are concerned in individual names. You know, I was really quick. I was really quick even day trading. I just felt uncomfortable. And the reasoning behind it, when you get a market that just continues to push higher, okay, and not everything is participating with it, you know, chances are that's not going to last too long. You know, something's going to have to happen where there's rotation out of the stuff that's just cooked. In other words, has gone up in a straight line. You know, that can't last forever. It just don't happen. And, you know, we were talking about this, both a couple of buddies of mine and a couple of members, how a lot of times when you see this, right, because if you remember, we were talking about this spot. We had another niner here, which is just in simple English, guys, just a sign of potential exhaustion, right, where buyers should get tired, all right? And, you know, sentiment on the intermediate term, just a lot of it based off price action alone, was a little too cooked. You know, a lot of things there calling for some sort of breather, okay? But what happened was the positioning out there, and you've been hearing a lot of us talk about this. I'm almost getting sick of it, but you know, the hedge funds, the fund flow, a lot of the positioning out there, just they didn't have much exposure to equities. All right. So as the market continues to grind higher without a pullback to allow these non-believers, as we were referring to them all along, get in, you get this type of price action. Okay. But it's not, you know, we spent the last couple of weeks talking about this. You guys know on the Saturday webinar, it's not all good news, the melt up. All right. Because you get less volatility, right? You get less stuff involved. there's really, sometimes there's not even any rhyme or reason what stocks are going up, what stocks aren't. You know, you get that gap up a lot of times and the market just sits there and maybe a late day fade. It makes it really, really difficult. You know, the only people who enjoy that, the only investors, traders who enjoy that price action a bit are the ones that sit or are sitting through it. Okay, so if you've been long and the market's melting up here, you know, through exhaustion signals, through some hot sentiment, if you're already positioned, you know, you're getting paid and you're a happy camper. All right. As far as the rest of us are concerned, the ones who get bit in the rear end are the ones who are chasing up here, looking, have that greed, right? We were talking about that. They guarantee you they were up at some point on anything they bought up here, but they felt like it wasn't enough. They wanted more because the market just goes up every day. And it feels like the market will never go down ever again. And then what usually happens, there's no way of knowing when, you get at least a washout of that melt up, right? So you get at least a washout. You see these pink bars here? At least of that. And that's exactly what we got up to this point. Oh, sometimes it could be a lot worse, but I'm saying at the least. All right. And this is where now, for, you know, a lot of us who felt uncomfortable and really, you know, I don't know about you guys. I know a lot of you guys had some nice hits during this grind up, short-term hits and stuff. You guys know, I was telling you guys, my exposure, my equity exposure as far as positions in options and calls was at the lowest level it was throughout, you know, this whole rally. So the market was going up and I was day trading and that was difficult. I was swing trading some equity. I got a little lucky there, but, you know, I wasn't really getting paid throughout all of this. So this is for me, this is a welcome sign. And you guys know that. I think today, put it this way, not to jump around, but I think this pull here of recent could have saved this rally, because if we continue to melt up from there, it was only going to end badly. It always does. Okay. I think we sold off. We had this drawdown in time enough to the point where we have a good shot of saving this bull run. Okay. And for a lot of reasons that we've been discussing. One, you know, the bears were pretty much hanging up their cleats, right? Think about all the bears you know on Twitter that you trade around, okay? And how cocky they were coming out of December, talking about shorting every rip, catching the move for the double tap test of the lows, right? They had that almost arrogance to them. And then, you know, as this move gets longer in the tooth, especially this here, we start to wipe out any interest out of that whole department, right? Bears have no interest in it for good reason. They don't want to be bothered anymore. It's a losing proposition. All right. So what happens is a rally stretches. If we were to continue to melt up from here, okay, eventually all the non-believer money would have been all in, because the market always forces that to happen. And then we would have had the blow up similar to January of 2018, that volatility panic attack, and, you know, case closed. All right. Here, the non-believer money hasn't gotten, if that's proper English, but hasn't got to the point of all in yet, if that makes any sense. If you guys saw the hedge fund chart from Sentiment Trader that I've been throwing around, right? The last update, you could see a couple of days of a spike higher above neutral, and that's them, you know, starting to get involved, right? Starting to get aggressive. As we like to say, They were dipping their beak. So they pretty much got run over here. Okay. But it could have been a lot worse. Yeah, there would have been a little more upside in the, the melt up, but it would have been a lot worse if it allowed them to get all in, because then that's it, case closed. So there's still enough cash on the sidelines that needs to get in, right? And it's only a matter now of time, okay? So here's where we are now. I have no idea, okay? I mean, I have a gut feeling, right, from experience, but I'm not basing jack poop off that. But I have no idea of what this turns into, okay? Maybe this turns into a larger correction. Certainly possible. All right. But for me now, it gets easier for me now. Okay. This was difficult here because, like I said, I didn't have a handle, I didn't have a gauge on anything, right? Facebook catching sweeper after sweeper after sweeper up here. I don't know what to do with. Okay. So now that we have this drawdown, for me, it gets, and I like things simple. All right, because I'm not the sharpest tool out there. So, you know what I mean? I like to keep things as simple as possible. And for me, it's very easy. Into this pull, I'm looking for any quality aggressive buying that comes into this pull. And that's pretty much my compass in how aggressive I get buying weakness. If I get involved at all, right? I mean, everything that I do from this point is pretty much going to come down to how aggressive the sharp paper is out there. All right, so I'll give you an example. Today I got long MMM July calls. Why? There was one bet today, okay, one bet, one name that caught any real buying, in my opinion. Actually, there was another name too. Well, I'll mention it after this. But this was by far the best bet of the day. This was the only dent play of the day where you were like, wow, all right, somebody's stepping in here and making a serious bet on this triple M. Okay. So everything I wanted to see, right? I'm not chasing. I'm not buying into earnings. It's post earnings, more weakness. I got a 9er exhaustion signal here. Everything I wanted to see, whether I like MMM or not personally, is irrelevant. Because what the hell do I know? So there's no thinking for me. You know, if I lose my money on MMM, I'm okay with that because it's all there. You understand? If I lose my money trying to force a play in, I don't know, give me a name that has like a Roku with a couple days before earnings, then I get pissed off at myself. Does that make sense? All right, so that's where things now get a little easier for me because now I feel like I got a handle on things as far as my positions and on the swing side. All right, because again, I had for a bit now, and it was, I'm not going to lie to you, it was annoying, but because of this environment, you know, I had no full position on the call side. The last one, you know, I'm being straight with you guys, was JP Morgan. Once I got out of that, that's it. You know, I played a couple of thinner names on the equity side, which I can put stop losses on, you know, the whole spiel, right? A couple little guys like this Tium, which reports earnings. That should be interesting, right? We made a little money there, you know, the G Skies of the world, all that stuff. This had a nice pull too. We'll see if they buy that. They had earnings today. You know, so these little moves here where I can play some equity and be a little quicker, right? I don't have to worry about the spreads. I don't. And listen, understandably, I'm not going to make as much money as if I think I feel a full position with calls. But I wasn't looking to do that. You know, I was looking to participate, survive, maybe grind it out, make a little bit of money until something like this happened. Okay. Or it would have been, we were talking about that possibility too, where maybe the market stalls a bit and there's some major rotation into some of the laggards. All right. Unfortunately, we didn't even see any rotation here today. We just saw basically a size sweep in MMM. Everything else was garbage. Also, the other name, if you're wondering, was LL. What happened there? There was a risk reversal, some bull flow before earnings. Had a run up there, you could see. Announced earnings, had a little more upside, and then gets this pull. And you had an opening August sweeper there. Nothing huge. An okay bet. An okay bet. All right, so and the activity that comes in, right? The type of activity that comes in is going to tell us a lot about what we have on our hands as far as the overall market is concerned. Okay, and that's what allows me to feel comfortable. All right, so for example, if there are several names that catch action, like we saw today in the MMM, okay, from my experience, that means that the sharp money, the aggressive money out there in the options market, they're willing to take risk, right? They're still in risk on mode. They're finding things to buy. Maybe we see some sectors they're rotating into. Maybe it's not tech. Maybe it is tech on a dip, right? Maybe it's software at a consolidation. Who knows? But the action that comes in off this pull, especially that it's post earnings, just becomes so much more of a clearer picture. And you guys who are members have heard me say, use the term a lot. Clean. Is the action clean? And that's what I mean by that. That's what I mean by that. And there were a lot of factors to it. One, a lot of these names were already littered with buying the whole way up, and it's been a hell of a rally. Okay. And we were going into earnings. Okay. And we're going to see flow no matter what into earnings. All right. And whether it's that name reporting, or maybe it doesn't catch their earnings, but could catch somebody else who's reporting in the group, for me, that's not clean. Right. So I can't be confident. I'll give you an example of that. We were talking about that. The LVS. All right. This is a name, as a lot of you know, that has seen a lot of action, right? And some big size. You guys remember. Okay. Had a decent rally, right? To say the least, along with the Wynn and the other casinos. Okay. Got a little too stretched, overheated. And, right here, if you want to call this a pullback, yesterday, they come in and they throw around some size again. So for me, it's, that's not the ideal type of setup for me for a number of reasons. One, Wynn still has to report. Okay, we're still unsure about the freaking date, but Wynn reports earnings at some point over the next week or so, I'm sure, next couple of weeks. Okay, so already that is a problem. Okay, and on top of, this name didn't set up again. Would it go sideways for 4 days after a monster rally? So now you got a little bit of pull here. If they happen to come back post-Wynn earnings, right, and there's no more excuses, and they continue to hit it hard, you probably have, a lot, well, not probably, you have a lot better setup in an LVS than if you were going to chase this rally up here. All right, so that's the other good thing that this pull is going to do. It's going to allow for the, as we like to call them, secondary entries on things that just went straight up. All right, this kind of reminds me too of the Brexit style event feel, right? With this whole China thing now. I don't know why, but it's got that feel to it, right? It's become an event. We're seeing all sorts of action expiring, Friday weeklies, VXX calls, SPY puts, all targeting the end of the week. waiting on a decision. So this has become kind of an event now, and you've got to be careful with some of the short-dated activity because it's all targeting that. And, players are protecting against it. Players are speculating for it. So it's a whole bunch of different things going on. But I don't know about you guys, if you can remember, in 2016, I'll tell you what it reminds me of a little bit. When was that Brexit thingamajigger anyway? Let's see. That was over here, right? The poll. But, maybe, we're in, you see this rally off the Bazooka Joe lows, if you can make that out. These charts are not that easy to make out. All right. The rally we had was a lot more stretched as far as upside is concerned. But Brexit was June, right? June. Okay. June 2016. But the point I'm making is like you had this rally stretch, and then look at this. See this little hiccup here? So that's that was like, from what I remember, that was after the Bazooka Joe lows, you pretty much had to chase the whole way up, the second half of this rally. And then we finally we had a little bit of turbulence that set up another move. And why does that happen? A number of reasons, right? The sell-off shakes out players, right? Sell-off shake out some of the longs. They need to get back in. More importantly, like I just mentioned to you at the start of the webinar, they reel in more shorts. They reel in bears. There's nothing more potent for a rally than reeling in shorts and then squeezing them to death. That's where you get these rockets out of those drawdowns. And not only that, okay, the difference between these rockets coming out of the drawdowns and the melt up is the participation, guys. You know what I mean? That's the most important thing. You want to be able, like when a rally, you want to be able to see broad sweeper activity. Like, remember the start of the rally? They were hitting everything. They were hitting everything. You could have thrown a dart. They were hitting everything with sweepers. And they were all participating in the rally. Okay? As opposed to what we were just in before this drawdown, the market was melting up every day, but I can show you charts. Stocks look like they were in a correction. A lot of the market looked like that. And that doesn't last long. So that's the good that comes out of it. And like I said, I mean, my personal opinion, especially the way the positioning as far as it looks now going into this, I think this rally got saved off what we just had here, where we could have been, heading to big trouble if we would have just continued higher from there. All right, so that's what we see. So I hate to make it sound so simple. Doesn't mean that everything you touch with this philosophy is going to be you're going to cash a ticket. Okay, but what I mean is the decisions are less, for me, I'm less involved in the decision making. Anytime I'm less involved in the decision making in this game, I'm in good shape. When I have to start racking my brain and I feel uneasy, that's when I know, it's just not a good time right now for me. All right, so that's it. For me, I'm keeping an eye on any fresh setups, and there's going to be a ton of them now that catch good-looking sweeper activity, right? As each and every day that goes by, earnings, we won't even have to worry about it anymore. And, the other thing is too, if you guys remember, now I'm willing to look at action with time behind it, where I wasn't, again, through, a couple of weeks of that melt up. So now, if there are missiles coming into December strikes, I'm cool with it. You know what I mean? I'm more than cool with it. Like, to be honest, if the MMM would have been further out, I would have liked it even better and more than likely size into it the longer it hangs around here. So that's a lot of things changed just because of what went on here last couple of days. TM came out with they came out with earnings. The funny thing is they were buying this thing into earnings. This is a good little stock, this one, huh? Software name. We got to keep our eyes on this one, Tree. We can't forget about it. You know, even if it goes higher and then eventually, what they do? They beat estimates, sell 23 million. They beat on the top and bottom line, this team. And they had a profitable quarter, huh? Looks like they had a profitable quarter too, Tree, right? Yeah. So a lot of these little names, you know, we keep them on our screen after earnings. And, you know, we have that too. We have a lot of names. Like I'm interested to see, and I usually couldn't care less about energy names, but I'm dying to see what this MPC looks like. Yeah, I got out of it too, Tree. I got out of it too. I missed the day, a couple days before the second move over that in Teum. I'm dying to see what this thing looks like post earnings. This MPC with all that flow. You know, like we said, this MPC, if any of this buying, so-called buying that we're seeing come in, right? There's been a lot of action. If it's legit, it's going to be there after the number. No doubt about it. So at this point, you know, can it gap up? Yeah. But if it does, you spit on it and you wait for the next. What are you worrying about? You missed an energy name? You know, who cares? But, you know, if this thing, if earnings is a non-event and this thing hangs around here or lower and they come back after it, it's something you got to strongly consider. Even it's an energy name. I hate energy, but it's something you got to strongly consider. All right. Anybody have any questions on the stuff we went over here, especially any members and private Twitter members? Anybody have any questions as far as what to look for and stuff like that? You know, and I want to get at this too. Might as well throw it in there just so you guys get an idea for intraday stuff. Okay, for intraday trading, I think it gets easier as well. Again, it was tough in the melt up to catch any sort of move intraday when a market just melts up and sits there, right? So if we do have some volatility and we have some weakness, we want to see that wave of buying come in. I don't know if you guys remember, like at spots in the correction or even the bull market of recent, just pretend it was weakness. But you want to see them come in and, you know, decent sweep after decent sweep. They don't have to be missiles, but you want to see, you know, it's got to be obvious. You know, you want to see some clean sweeper activity come in. You know, the market likely will be down pulling, and that'll sense, you know, that'll give us a heads up on a turn. And now, because of the volatility and the weakness, that turn can be half decent. All right. So, for example, today, right? And, you know, you guys in the room know because I'm yapping to you guys all day, but those of you on private Twitter probably saw me post a few times throughout the day. The little bit of flow that came in or some of these turns was pathetic, right? Pathetic. It was awful. Like, you can't even call it buying. What was it? Maybe one or two small little weekly orders. You know, you know how they come after stuff when they want it, right? They're gonna hit SPY. They're gonna hit the high beta names. You're gonna get that algo sweeper type activity one after the other. You know, so the good thing about this type of environment, when that type of activity lines up at a low, you know, maybe there's a niner, doesn't have to be right at that niner, could be off that niner, but you see that uptick in activity come in, that's where you want to jump in, right? If you're playing equity on ES or maybe you're trading names, you want to get in, you know, figure out where you're going to stop yourself out, admit to yourself there's not any further momentum coming in, and have an idea or race stops, you know, along the way to the upside. You know, as far as options are concerned, you want, I mean, for it to be worth playing the calls, you know, it's got to be something where you think the move is going to be worth it. So, in my opinion, you know, you want to see a decent amount of action come in, or coming off a decent fade, right? You don't want to come too late into a rally because you might be coming in too late into a rally, might not be worth it on the call side. But you want to see that type of buying. It's not going to be as steady throughout the session as we were seeing throughout the whole bull run, but you're going to see periods of that. Today, we didn't see it, but they'll be there. They'll be there. Were there any signals in the flow of SPY to let us know this was coming? No. Think about this. Think about what happened here, right? The signs that this was coming were basically the signs that we talk about and look at every day. The problem is, as the market continues to go higher through those signals, the likelihood is you're probably going to ignore them anyway. All right, think about this. When were we talking about, all right, and if you're a member and you're not aware of the discussion we all had, and we made sure we had it numerous times, of taking down your exposure, right? Make sure whatever you're in, if you get caught, you're okay with it. We had those conversations, okay? The problem was those conversations were over here, okay? And what a lot of traders do is, as this happens and a market pushes through what we were talking about here, you're like, that's nonsense. That shit don't work. You know, this market could go like this for another 6 years, right? But there are always signals, a heads up, that the potential for this, the odds of this are higher. That's what we look at as far as sentiment's concerned. Again, and Nick, you know, I'm not telling you to lean on every single word that comes out of my mouth throughout the day, but you know, there was a reason why, you know, I was not looking to take any full position on the swing side, right? There was a reason why I dramatically took my exposure down and didn't add it back on. Yeah, because this doesn't bother me. Of course, I'm not making as much money as I would be if I was fully exposed, but that's not even true, because honestly, there wasn't a lot of participation in this tack on move. But sometimes there's more participation, all right? But I don't let that bother me, because the name of the game, and I stress this to you guys all the time, okay? Coming at this was a deep correction, so I'm just using this as an example, all right? Whether it's a pullback down to here or a long drawdown, right? The initial activity that comes in here, that's where the majority of our P&L is going to start to generate from there, okay? And we're going to make money, but then we got to have that funnel view on things, where as a rally gets longer in the tooth without a pullback, your risk exposure has to become less and less and less. So when a pull happens, right, you're not going to be 100% in cash unless you get lucky. But whatever you get caught in, you held on to the majority of the profits you made, right? That's the logic there. That's the, you like that drawing. That's the only way, guys. That's the only way. If you think sirens are going to go off here, and then a siren is going to go off right here at the tippy top, you're nuts. you're nuts. All right. The beauty out of a lot of the stuff we look at, okay, is that it can give us a heads up ahead of time when we should start paying more attention to our risk rather than how much money we're going to make on any further upside. Does that make sense? All right. So, like, for example, even though hedge funds, aren't involved, right? And all the positioning we're looking at, they're not all in. Okay. Yeah, that means maybe dips are more likely to get bought. There's the potential for a melt up. Okay. But you can't let that affect everything else you look at, right? When we look at like the daily sentiment index, the DSI, right? And we see a 90, an 80 or a 90, okay? That doesn't mean we have to go under our desk and hide per se, right? If there's still aggressively sweeping names, if there's still some juice out there, if there's still some trades out there we think we can make some money in, then we can still participate. But we want to make sure at least size down, less risk. Right? We talk about that all the time. I mean, it's important. You cannot, the most important thing is this. You cannot treat this part of the rally the same as you treat this part of the rally. And that's what retail does time and time again. Everybody, all of us in here, nobody's any different. We're all going to make money getting long here. All of us. The only people who don't make money, the only players are the commies who are shorting into this, right? Those are the only players that aren't making money in that. Everybody who's paying attention, especially to flow, sentiment, and all that stuff, is going to make money. Steven might get a little luckier than me, and he may make more money. He might have a better hit on a name than I do. That's all luck, in my opinion. That's all luck. Maybe he did one thing a little different than I did and end up working out. There's nothing you could do about that. Steven, you degenerate. But you know what I mean? You have no control over that. So it's nothing, you don't even focus on that. But the difference between the retail and the pros is pretty simple. The pros are going to hang on to a chunk of the money they made in this rally. It's that simple. Where retail is going to give it all back and then some. Not only give it back, but they'll likely give back, throw in a little extra for good measure. And why? Because they get more bullish on the way up. Hence why sentiment, is useful. They're the least bullish over here, and they're the most bullish up here, right? That's how it works. So that's what you have to, in my opinion, if you can solve that, again, doesn't mean you're going to become wealthy the first year of trading, but if you can nail that down, what I just showed you there, right? You're going to make money in the rally, but learn how to hang on to it by not getting greedy and not always be concerned about how much more money you're going to make rather than holding on to a chunk of it. If it means taking money out of your account, you got to take money out of your account. Everybody's different. All right? Size down. Do something. And each time you do it, you improve on it little by little each and every time, and you're going to notice a big difference, right? Let's say you gave back 75% of your gains this go around. Okay? Next time you gave back only 50% of your gains, right? The next time 25%, or you got lucky 10%. So that's what it comes down to. Everybody else, what happens is the definition of degenerate. You want to swing a hammer up here, right? You get frustrated. I'm gonna find one thing, and I'm gonna roll the dice. If it clicks, I'm in good shape. If it doesn't click, I'm dead. You know, eventually the market's going to bite you in the ass anyway with that approach. So that's what you got to focus on. Now, for me, you know, what allows me to get a better gauge on when to focus on risk a little bit more, you know, is the flow and sentiment, right? Even these Niners here that you're looking up on the screen, to me, that's what they are. Just a reminder of a couple things where I shouldn't chase without a breather, right? Where I should take some profits off the table, where I should roll, where I should trim my risk, that sort of thing. All right, so the good thing, again, like I said, from what I see, again, there may not be any sweeper activity. I have no idea. I can't predict the future. But the backdrop, I think, allows this dip to get bought. And when they buy it hard. And I think that can set up something really nice. You know, it gives us, again, we haven't had another shot at this thing. Think about that. We were complaining, right? We were complaining about this rally, about not giving us that entry for a while. This was the closest thing to it, and it felt so fast, right? It didn't even feel like a pullback. You know, this, it doesn't look like much here, but, you know, underneath the hood, because of some of the lack of participation over here and all that stuff, there's some decent setups out there. There's some stocks that got hit over the head. So I think I skipped a couple questions here. Maybe somebody was afraid Warren Buffett sold. What did he sell? Warren Buffett holds on to positions longer than I'm going to live. So I really don't pay attention to Warren Buffett too much. He does me no good. Anything in OLED, nice earnings beat OLED. I get OLED mixed up with OLED. They had there was pre-earnings action in OLED. Nothing post-earnings yet. You know, there hasn't been too much post-earnings action. You know, I'm trying to think of any other names of recent that had some post-earnings action. There was, you can literally count on one hand. You know what I mean, Paul? But I think, again, tech might be a little tough because you still got a lot of, you know, big names out there like the CRMs and all that stuff still to report. They can still be traded off weakness. You just, you know, you got to navigate around earnings. But I think the other groups, a lot of names, we got through a lot of big names, and a lot of these things just look like crap. So if money wants to come out of some hot spots and go into so-called value, you know, and you know what? As difficult as it looks right now, if there's some sort of trade agreement, you can almost see that happening. Now, that's a big if, but you know what I mean? If there's some sort of deal where the tariffs aren't going to go in place Friday, you could see them getting really, really aggressive, and some of this stuff they just destroyed. You know, destroyed. You know, even the caterpillars, these things have done nothing, you know, throughout the whole last leg of the rally. Nothing. So there's money on the sideline. It's just a matter of if and when they come in and what they come into. That's what we have our eyes open for here. You know, again, outside of MMM, that's the only thing I've taken for a swing here, Paul, off all the action as far as calls are concerned. Google had some action. You know, if you're interested in Google, now you have a dip on it too. They were July's, right, Tony? Oh, good. Tony's mentioning some of the post-earning stuff. Google, right, WWE had some put selling and a little sweeper. And yeah, Facebook, the problem for me, Tony, as you know, is, there hasn't been much of a dip. At least you're getting a little breather here now, At least you're getting a little breather here. Google, if you guys are interested in that name, is one to take a look at. What were they? July 1250s. Boeing, there was a block and there was a small weekly sweep, which means nothing, Esther, because of what this turned into now, we were seeing FXI, spec action for Friday. We're seeing calls and puts for Friday. It turned into like a Brexit vote. That's what it turned into, basically. So unless, for me, Boeing, you're going to have to see them get really, really aggressive there. As they have in the past at times, but you really want to be convinced they're making a bet on Boeing and they're not just rolling the dice or hedging and stuff like that. But nothing noteworthy today, Esther. No. Nothing noteworthy in Boeing. What else? Anything else you guys are looking at? Again, not a lot of post earnings. There's definitely some earnings plays that we can eye and see if they come back into, that sort of thing. What's EA doing, by the way? These gamers, too, are set up. I hate this stock, but, Oh, it's up. Ay, 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 ay. I was going to mention if EA is down, if we see some action in it, mañana. SMAR. I don't know that SMAR. They trade options? SMAR. Yeah, Yandex, you were telling me, Tree. Yandex catches a lot of action. But it was, they were tide blocks too. They were tide blocks. Yeah, it doesn't look good. This looks good, right? This looks good. It has this. You had the niner, breather, and then rip. And then you had another niner here. Look at that. Mark the top twice. Breather. So now you're right. Some sweeper activity there would be nice. Good call. Good call. That's definitely one to watch for sweepers. And they like to hit this name, Tree, as you know. They could come after with size too. There's some nice action in this Yandex. Post earnings, so that's another plus. Yes, that had a little bit of action, right? The paper stocks, I haven't watched them the last couple of days. What are they looking like here? Let's see. Yeah, these are all still stuck in consolidation. There's so many like this, Tree. No? I don't know. I see so many names like this that look so good to me if they catch aggressive activity, If they could catch some aggressive activity, these names look like they're all pent up. SGMSB. Oh, yeah. And then we're beating that stock up again. It's like a punching bag, this thing. So back up to here, I guess. This is this thing, when it squeezes, as you know, George, she can move, right? Gotta see if we could catch a squeeze one of these days in this thing. You don't need much to move this thing. But yeah, Tree, I agree with you. There are a lot of names, like Tree's mentioning, the paper stocks, the Yandex, just a lot of names. I keep going back to like a Caterpillar. Again, I'm not a Caterpillar fan, but just a lot of setups like this. And now the setup is half the battle. We need action. you know? Because it's that simple, right? Caterpillar catches a sweep like Triple M, right? 3 months out. I'm salivating. Like that's it. I'm not asking for, what am I asking for here? Like if Caterpillar can catch any sort of aggressive activity here, and we know when they buy Caterpillar, you know, they fire shots at this thing. You know, they don't fire $40,000 weeklies. Yeah, that's trade war nonsense. That's rolling the dice on a Trump tweet. But I don't know. My gut is if they buy, they're going to buy. These are the things they're going to buy. And if they buy them, I think they really, really come after them. So, but again, we don't need to, right? We don't need to try to predict it. Let it happen. See, and that's the thing. I don't know if I mentioned it earlier to you guys. I know a lot of you guys are more active than I am, especially swing trading. I'm a lot more selective, but that's kind of my seatbelt. You understand? So if MMM is the only good-looking bet, right, over the next 2 weeks, then that's the only thing I'm going to be in. I'm not going to go make up my own stock picks. You know, I've been down that road. Not going down that road again. So that's my seatbelt. So that tells me, right, if they're not super aggressive enough for me to swing anything, then from my past experience, that tells me a lot about, you know, the smart money positioning out there. They could be waiting on something. Like you guys remember the correction, right? I mean, we were complaining about the flow, if you remember, from August, and the market rolled over in October. Think of that. That's what I was worrying about we might run into. If we would have continued up from here, you know what I mean? Like we did August through October, and the flow, you know, there was nothing clean and stuff like that. That's what my fear was. And now that we got a little bit of they opened them up a little bit, I feel better. Because again, the sharp paper, the initial buying, we see it once in a while, but from my experience and when they work, when they're like real bets, they don't come into names up here. You know what I mean? They don't come into a shop up here. You know, they like to nail bottoms. They like to buy in consolidation. You know, that's their bread and butter. They're not sweeping missiles up here in this. You know, once in a blue moon you see it, and even when I see it, I don't believe it, you know? Even when I see it, the rare occasion I see it in a name that's gone parabolic, I don't believe it. You know, they like to come into either blood or, like I said, the consolidation that we're seeing across the board here. All right, but that's all basically I got to share with you guys. Hopefully by the next week, you know, members I talk to every day, but those of you who are members, hopefully by the next webinar, there'll be some more names that they've been buying off a little bit of a pull here, right? Some fresh setups. But that's, for those of you who are members, that's all my best advice, you know? Keep an eye open to the action, right? Have an open mind. Try not to get wrapped up in the noise out there. There's going to be a lot of noise, especially now with these headlines around. You know, as long as we're seeing quality activity, it doesn't matter. It doesn't matter what else is taking place out there. Are we all good? Anybody have any last questions or anything to add before we wrap it up? QD. Didn't this have a nice move, Tree? Wow, this was a nice move. Now, when's earnings here, Tree? I think they have earnings coming up. 5/22. So you have a little bit of time. Wow, this got hot. That's a big move for this thing. This thing's been stuck down here for a while. So what you like a run up into the number, you're saying, right? Yep. Yeah, a lot of these Chinese names report this month too. So it should be interesting. Thank you, John. I appreciate that. All right. And if anybody who's new, again, wallstreetjesus.com. If you go to the strategy section, it's pretty easy. Quick, easy reads, trust me. Right here, you go to strategy and you get a lot of information here. You know, some trade breakdowns of how we use the flow and so forth, how to use it for just sentiment purposes. You don't have to just trade the names. You know, it's not a stock picking thing. It's basically a read on the smart money sentiment. That's what it is. Oh, good call. Good call. That was legitimate action. I'm just not too crazy about the name, but good call. There was some buying in this today. Nothing extravagant, but if you like the name, LBTYA. And these names have been strong, Tree. Good call. Definitely was clean action, if that's what you're asking. You got a niner there, right? This is a little slower though, right, Tree? This name? Slow mover? Yeah. But definitely clean action. If you like the name, you like the setup, that sweeper activity was clean. I think, were they Octobers? I think they were October. Oh, yeah, you put it there, Octobers. So you got some time there. You got some time to catch a move. I'll put them on the top bet list. All right? The top bet list, I'll throw all the top bets, including the MMM, and this way we can keep an eye on them. All right, guys, always a pleasure. Be good. Good luck the rest of the week. Should be interesting.